Very clear. Canada ASPE 3065. Leases. Private company focus. Hello, and welcome to CandiMentor. Today we take a private company-focused deep dive into ASPE 3065. Leases. What ASPE 3065 covers? Private company framing. ASPE 3065 is the Canadian private company lease standard. It keeps the classic two-class model: capital, finance leases, and operating leases. For private companies, this matters. Capital lease recognition brings assets and obligations onto the balance sheet, which lenders, buyers, tax authorities, and auditors scrutinize closely. Interview anchor. ASPE 3065 keeps the bright line capital versus operating tests. Get classification right because lenders and taxes depend on it. And then, when is a contract a lease? Identify the lease first. A lease exists when a contract conveys the right to use an identified asset for a period of time in exchange for consideration. Key indicators: identified asset, serial number, location, or exclusivity. Lessee controls use and obtains substantially all benefits. The contract conveys decision rights over use. If services are bundled, separate the service element from the lease element and test control over the asset. Practical check. Look for asset identifiers, serial numbers, exclusive use clauses, or delivery/installation evidence. Capital lease versus operating lease. The four classic tests, ASPE 3065 uses four bright line tests. If any is met, the lease is a capital lease. 1. Transfer of ownership by the end of the lease. 2. Bargain purchase option reasonably certain to be exercised. 3. Lease term is equal to 75% of the asset's useful life. 4. Present value of minimum lease payments is equal to 90% of the asset's fair value. Interview phrasing. If the economics are effectively a purchase, treat as a capital lease. ? Lease term and useful life. Timing measurement. Lease term equals non-cancelable period plus periods the lessee is reasonably certain to extend. Useful life is the asset's estimated useful life under the lessee's intended use. For project or seasonal assets, use practical remaining life. Small example: a 5-year lease for an asset with a 7-year useful life. Lease term equals 71% of life, not automatically capital under the 75% test. Present value test. Steps and what counts. Present value of minimum lease payments includes fixed lease payments, amounts guaranteed for residual value, bargain purchase price. Choose discount rate, lower of lessor's implicit rate, if known, or lessee's incremental borrowing rate, IBR. Steps: 1. Identify minimum lease payment schedule. 2. Choose discount rate. 3. Discount each payment to PV. 4. Compare PV to asset fair value. If PV greater than 90% of fair value, capital lease. Sign. Lessee accounting. Capital leases. What to capitalize. For capital leases, the lessee recognizes an asset at the lower of fair value or PV of minimum lease payments, a corresponding lease obligation at PV of minimum lease payments. Include initial direct costs in the asset, executory costs, maintenance, insurance, taxes if lessor's responsibility, remain expenses. Journal at inception. PV example, 88,452. Full debit, leased asset, capital lease. 88,452. Credit, lease obligation. 88,452. ... Subsequent measurement. Capital lease expense pattern. Split into depreciation on the leased asset over useful life or lease term, depending on ownership option, and interest on the lease obligation, amortized using chosen discount rate. Typical period entries. Interest accrual, full debit, interest expense, credit, lease obligation, interest portion, depreciation, full debit, depreciation expense, credit, accumulated depreciation, leased asset, payment entry, principal plus interest, full debit, lease obligation principal, full debit, interest expense, credit, cash rule of thumb. If title transfers by lease end, depreciate over useful life, otherwise over lease term, end. Lessee accounting, operating leases. For operating leases, expense lease payments as incurred. No asset or liability for the lease itself is recognized, but future minimum lease payments must be disclosed. Expense entry, full debit, lease expense, credit, cash or accrual. Note, operating treatment affects balance sheet gearing and EBITDA, critical for covenant calculations. End. Lessor accounting, operating versus capital, lessor view. Lessors also classify leases as operating or capital. Capital finance lease, lessor view. De-recognize the underlying asset and recognize a lease receivable equal to the net investment. Interest income is recognized to produce a constant, periodic rate of return. Operating lease, lessor view. Lessor retains the asset and recognizes rental income on a systematic basis. Lessor journal, direct finance example at inception. Full debit, lease receivable, PV, credit, asset, original cost. Subsequent collections allocate to interest income and principal reduction. Off. Residual value guarantees and bargain purchase options, measurement effects. Lessee guaranteed residuals increase minimum lease payments and therefore PV. A bargain purchase option lowers effective expense and can trigger capital classification. Always include guarantee amounts and the bargain purchase figure in PV tests. Example, a $10,000 lessee guarantee at lease end include in minimum lease payments for PV calculation. Sale-and-leaseback, ASPE practical rules. Under ASPE, if a sale has occurred under revenue rules, account as sale plus leaseback. If not a sale, treat proceeds as financing. Sale plus operating leaseback, profit, loss on sale, recognized immediately, subject to deferral rules for retained use. Sale plus capital leaseback, seller lessee defers profit and amortizes over lease term. Always inspect legal title transfer and evidence of control transfer. Lease modifications and reassessments. Handle changes carefully. If lease terms change, reassess classification. If modification creates a new lease or newly meets capital criteria, account prospectively from modification date. Adjust PV of lease obligation and the asset carrying amount accordingly. Document assessment of extension options, reasonably certain versus not. Tax and accounting differences, capital lease tax treatment. Tax authorities often treat capital lease assets as owned assets for depreciation, capital cost allowance, but provincial and CRA rules vary. Maintain separate tax base tracking. An operating lease for accounting may have different tax deductibility. Reconcile accounting depreciation and tax capital allowances. Presentation and disclosure under ASPE 3065. Disclosures commonly include nature and significant terms of leases, future minimum lease payments, operating leases by time bands. For capital leases, gross future payments, current portion and long-term portion. Lease expense for operating leases, assets acquired under capital leases and accumulated amortization, and contingent rents and commitments. Lenders scrutinize the lease note. Keep it clear. Numerical example. Step-by-step capital lease. Facts. Fair value $100,000. Payments $22,000 annually for 5 years. Arrears. IBR 7%. No bargain purchase or residual guarantee. 1. PV annuity factor approximately 4.100. PV equals $22,000 times 4.100 equals 90,200. 2. PV over fair value equals 90,200 over 100,000 equals 90.2%. Meets 90% PV test. Capital lease. 3. Initial entry. Full debit. Leased asset 90,200. Credit. Lease obligation 90,200. Year 1 interest. Approximately 90,200 times 7% equals 6,314. Payment splits. Interest 6,314. Principal 15,686. Depreciation 5-year straight line. 90,200 over 5 equals 18,040. Entries. Interest plus payment plus depreciation as shown earlier. End. Impact on ratios, covenants, and financing. Capital lease recognition increases assets and liabilities, raising leverage ratios. EBITDA often increases because rent expense is replaced by depreciation plus interest. Private companies must check covenants early and renegotiate if recognition changes covenant metrics. Interview line. A lease classification switch can trip covenants. Disclose and discuss with lenders early. True. Related party leases, extra scrutiny and disclosure. Related party leases often need arm's-length evidence. Auditors and lenders expect independent valuations, board approvals, and clear disclosure of terms and benefits. Document commercial rationale and independent support. Common audit procedures for ASPE 3065 engagements. Audit checklist. Inspect lease agreements and all amendments. Recompute PV tests and classification thresholds. Verify discount rate, IBR, compared to bank rates. Inspect title delivery documents for sale and leaseback. Recalc depreciation and interest allocation. Test payments against bank statements. Confirm lessor creditworthiness for residual risk. Verify disclosures and related party evidence. Document judgments, especially on options and rounding rules for percentage tests. Common pitfalls and audit red flags. Watch for deliberate misclassification of capital leases as operating to hide liabilities, exclusion of guaranteed residuals from minimum payment tests, use of unreasonably high IBR to fail PV test, failure to capitalize initial direct costs, misdating lease commencement or ignoring commencement fees, incomplete disclosure of future minimum lease payments, improper sale and leaseback treatment without control transfer evidence. If you see these, expand the sample and escalate for senior review. ... Subleases and assignment. What to check. If a lessee subleases, evaluate whether the sublease conveys substantially all rights and benefits. Original lessee may remain liable to original lessor. Verify sublease contract, payment flows, and any guarantees or indemnities. Lease incentives, rent holidays and stepped rents, practical handling. Rent holidays and incentives typically reduce effective lease expense for operating leases. For capital leases, they reduce the asset cost or affect minimum lease payment calculations. Stepped rents, when accounting policy requires, straight-line operating lease expense may be used for even presentation. Example, 2 months free in year 1. Spread benefit evenly over lease term if policy requires straight line. Impairment considerations. Leased assets under ASPE. If indicators exist, test capital leased assets for impairment under ASPE impairment guidance. Compare carrying amount to undiscounted future cash flows. If impaired, write down and update tax and depreciation tracking. Entry for impairment. Full debit, impairment loss, credit, leased asset. Practical tips for private company interviews. Start with the 4 classification tests. Explain PV computation steps and discount rate selection. Give a tiny numeric example. Mention tax and covenant impacts. Discuss audit procedures and typical manipulations. This structure shows both accounting competence and business awareness. End. One-paragraph answer to use in interviews. Under ASPE 3065, leases are either capital or operating. Capital leases meet bright-line tests: transfer of ownership, bargain purchase, lease term greater than 75% of life, or PV of payments greater than 90% of fair value. Capital leases are reported as a leased asset and lease obligation, depreciated and accreted with interest. Operating leases expense payments as incurred, with required disclosure of future minimum payments. For private companies, classification affects covenants, tax, and valuations. Compute PV carefully, document judgments, and disclose fully.